All right, well, Monday was the worst day of the year so far for stocks, and perhaps no sector got hit as much as the energy names. In fact, they've been pretty weak for the last couple of weeks here. Let's bring in Eddy Elfenbein of the Crossing Wall Street blog, Jonathan Krinsky of MKM Partners. Eddy, you know, it's interesting because if we get a border adjustment tax, it should benefit domestic oil producers and some refiners, not all, because if you got to bring the oil in, you might get pinched, but domestic producers should do well, but a lot of them have been weak lately. Is that just a fear of overproduction of oil, of prices falling again? What do you think?
It could be. I think it's just an unwinding of some of the recent trade. I mean, oil's had a spectacular year since the lows of about a year ago. But as you said, over the last 7 weeks, it's just been sliding each day lower and lower. And then on Friday, two things happened. One is a terrible earnings report from Chevron. And then also the XLE broke below the 50-day. And then we saw even more weakness today. But here's the thing. I like energy right now. But this is the key. It's not a trade. It's going to take maybe 6 months to a year to play out. The key, this is the big game changer, is that the OPEC cuts that they announced in November, these were the first major cuts in 8 years, they're actually working. I mean, OPEC, they never cooperate, and it really is working this time. And that's putting a floor below oil of about $50. So I think once we see some of this near-term shakeout in oil work itself out, I think it looks very good for the XLE and the broader energy sector as a whole.
Oh, a little bullish there on the XLE. Eddy Elfenbein, a fundamental perspective. Jonathan Krinsky, do the charts match up with that? Is it a bullish chart or a bearish one?
Well, Brian, we can't talk about energy stocks without talking about crude oil. Those two, as we know, trade concomitant with each other. And if we look at crude oil, what's interesting to note is that the large speculators in WTI crude have some of the biggest net long positions that they've ever had on record. So everybody's kind of skewed to the bullish side of the boat. That creates a bit of a headwind, and we think some of that needs to get unwound, which could cause some selling pressure in crude. Now, when we talk about energy stocks, again, we have to remember it was the best performing sector last year, but most of that was a function of a reversal of it being the worst performing sector for much of 2014 and 2015, and the bulk of that gain came in the early part of last year. So if you weren't overweight energy stocks by April, you missed out on most of the outperformance. And now we have the opposite happening. We're seeing energy stocks relative to the S&P starting to break down below that uptrend line that goes back to the early part of last year. On an absolute basis, it's also breaking its uptrend line. So we think there's a bit more weakness. You know, we don't think it's going to be anything like we saw again in 2015, but XLE probably has some more downside, maybe the low to mid 60s. It's still well above a rising 200-day moving average, but given the position in crude futures, we think energy probably underperforms here for the near term.
All right, well, that's why we do it both ways. Different view, obviously, from Eddy. The chart's saying one thing, Eddy says another. A fight to the oil death, guys. Thank you very much. We do appreciate it. Folks, thank you for watching Trading Nation. As always, I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.